Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Well, hello.
Marco, how you doing, buddy?
I'm good. How are you?
Good.
Cool.
How's your what do you call it? The Neo doing today?
Neo doing today? I haven't been following it at all. I'm up to other things, you know.
Better things, exactly.
Yeah, exactly.
What do you got? Well, I figured we start today. You know, we've talked about so many things over the last. Let me just bring this a little bit forward here. Talked about so many things over the last couple of weeks that maybe a little bit of a very, very quick update, including some developments that I see today that I just want to make sure that people are aware of. While we're looking at different call options and different trades over the last few weeks, they're not all winners, right? And they're not all losers, right? There's definitely some losers, and I don't want to be the person that says, "Oh, we only win." It's not the case. So why don't we start off with some of the things that we're seeing out there? The first thing we have to talk about is which one? GameStop. This one is incredible. I mean, kudos to the guys from Wall Street Bets to stick to their guns. They're along the name. To me, it looks like they have broken the camel's back here with the shorts. I mean, the shorts are scrambling. Where is it now? Let's see, GameStop. Let's you have my chart?
Yep.
My thing. Okay, so let's just take a look at GameStop. I mean, these guys did it. They got I call it Braveheart. They have an army of people, and it is a great story, but they have rallied the troops around this one, and really looks like they crushed the big shorts. Although he's fighting, he's down, but he's not out. So let's just take a look. The stock's up 70% today. The news was, a follow-on of yesterday, where I guess there's a research report today, and the Ryan Cohen has his merryman of executives now on the board of GameStop, and that's been the story to get these people on, to change the company, to change the direction of the company. They've got what they've got what they wanted, and now they have to execute. That said, the stock is up huge. It started, it opened up and then it just exploded as the shorts are covering. So again, we talked yesterday about how things can change dramatically overnight, how high these options are priced, yet it's, in a case like this, it's not high enough. You see in massive call buying and trading in the 30s, 35s, and 40s, even at 300 vol. You look at, this is a January 15th, 35 call. Earlier, I looked at it, I think it was $5.80. It was something, it was like almost $6. And this expires, today's Wednesday at 1:00 Eastern time. So it expires in literally 2 days. And that is another 5%. If you wanted to sell this, that would be $5 on $33. That's, a good 15%. However, if the thing's up another 100% tomorrow and trade 66, you're carried out. So, it's not free money, because it's shown you that it could actually move. And that doesn't mean the shorts are giving up either, because if we look, he's easy to track here. This is Melvin here. I suspect he might have even jumped in here earlier today or bought some calls. But this was him. It looks like he was getting out of these, and then it looks like he might have been doing some put spreads or moving it up. So he's just getting bigger on the way up. There's only 2 days left. So it's incredible that this is, this is how it's being played. this to me is an incredible story of short squeeze, of the average investor, having millions of people loving the idea and pushing, having a large hedge fund manager buying puts from when the stock was $5 to $10. He might have covered some in some stock, maybe, but it just looks like he's continuously. And by the way, you got to remember, if the stock went, you can't say he lost everything. He actually, believe it or not, in a crazy way, he actually could have made some money. If this was let's take a look at it. Remember, we talked in the video, the Robinhood video, we talked about trading volatility. But in something like this, he's not a volatility trader. But what might be interesting for people to understand is, and to get a sense is, this stock went from he bought these when the stock was around 22 and change. Okay. These right here. So he bought them at 22 and change. The stock went down to 17 and change. Okay. If these went from where he paid $4 to like $8 or something like that, close to $8. If he bought stock at say 17, $18, maybe not all of it, maybe half, 2.5 million shares, you can do the math and you could start seeing that, what? He might have made money here, because he just made from 17, $18 to where it traded around 35, 40 today, 35. That's an $18 move. $18 times 2 million shares, 2.5 million shares is how much? It's 36 plus 9, 45, 40 to say quote 36 to $45 million he made. Now he's going to lose on his put position, which was 50,000 times at that point $8. But you could see that he didn't lose any money, because if he lost all $8, which he didn't, there's still some left. But if he lost all $8 on 50,000 puts, that's $4 million, right? I'm sorry, that is $40 million, right? 50,000 is 5 million shares times $8, which was the premium. That's 40 million. But on the 2 million, if he covered, I'm not saying he did. If he covered 5 million, it's a home run positive for him, and he has more bullets now. But let's just say he covered $2.5 million, half of it. If he covered $2.5 million as the stock went down, it was down for a week, down to 17, $18, and he gets 2 million shares, 2.5 million shares. He makes today, you're talking about a $17 move on it, call it $18 move on 2.5 million shares is $45 million. So net, he's up on that trade. Is that incredible or not? It's just so people think that they're beating him. They beat him. Well, he, like Batman, figured out a way to wrangle himself out of this bad situation. And on something like this, he actually made a lot of money.
Wow.
So now he has more bullets. So you wake up and you're like, wow, short squeeze. Okay. Well, I'm selling out now at 35.40, call it, as this thing goes short squeeze. Now I'm actually selling stock, and now I want to roll my puts because this is a short squeeze. So I'm now going to roll them I'm going to do this put spread. So he's got out of this. It looks like he's got out of some of this, and it looks like he's done some sort of 1/2 put spread here, or 1 by ratio here. So it's 10,010. But all of this is likely, I don't want to say likely him here, just because this is now out of the money puts, and he's probably done some put spread here to move up. Okay. So I just want to give people some perspective that, it looks like you slayed the king, but the king, hedge fund manager, might have actually made money on this position. All he had to do was cover, even if he just did 40% of his position, he would have actually broken even on this trade, which is incredible to think that he was short $40 million of premium. And if he buys only 40% back, which is 2 million shares, as it went down and he was up money on that trade, he made almost, let's call it almost 75, 80% on that trade in a week, and he got bigger and he covered 40%, then he's actually flat to maybe up on the trade today. Crazy, right? But that's the power of buying options, especially even if you're a directional trader and you cover, he wasn't out there. The open interest still 50. He didn't trade these. He wasn't out there selling these puts. He didn't sell the puts. So people think, oh, he's still in them. Well, maybe he's only in them halfway or 60% of the way. The other 40, he used stock to lock it in. He used stock, not thinking this was going to happen, but just, in the event that it did, he was going to make a fortune. So this is what this is, it's a very, how would I say it? It's a very, it's a crafty game. You know what I mean? You don't really know. You think you killed him, and then he pops up and he's like, how does this guy have more bullets? This guy's getting destroyed. Maybe. I wouldn't say he's probably up from the beginning on the position, but today it might very well that, I mean, if he did, let's just play devil's advocate. He actually covered all 5 million shares. Let's just say he covered all 5 million shares. He covers 5 million shares and they're up 17, $18. He makes $90 million. So he'd be up 50 million on this trade. Think about that. Everybody's thinking he lost. We don't know. We don't know the answer. We don't know.
This is good perspective for people.
Okay. Yeah, it's just, I want people to understand the full story. I love the battle. I love the battle between, the millions of people that love this name and are passionate about this name, but be careful about thinking that you slayed the king here or you slayed the hedge fund manager. He is short, but I'm telling you that if he covered some, only 40%, he's break even, flat today. You would think he got destroyed. He's flat today. And now he's getting even bigger. He's even thinking, I want to get bigger here at 35. I'm not saying this happened. I don't know the position, but I'm simply trying to give you some perspective that, before you're chanting that this guy's, you're carrying his picture around and, like Alexander the Great down the street, like we slayed the king. He might've made a lot of money here. So That's it. That's my 2 cents on GameStop. Stop. Look, people are passionate about this back and forth. They think it's going up a lot. We talked about it even yesterday that Ryan Cohen, he's got a plan. They have this plan ahead of them, and they take steps to reach that goal. He did it with Chewy. I understand the ideas that he's going to do it again. He has vision. He now has his executives on the board. He's going to have the opportunity to execute that plan. And the street loves it right here. They're killing the shorts. Melvin Capital is not the only short in this name. There's a lot of people short this name. Some simply because it went from 5 to 20 and want to see the proof that it's going to work. I don't know. I have no skin in the game. No position. I've never had a position in this, but I love watching this and I learn so much, and it's great. This is a great lesson to learn in so many different parts, winning, losing, how the hedge funds play it, how they win, how they lose. Maybe they won, maybe they didn't, and how it's going to play out from here it's like a movie, right? It's literally Braveheart of Wall Street. Maybe that's the title, the Braveheart of Wall Street. So that's that. So let's move to the next one. The next one we should actually think about is that I see again activity. The stock is traded up. FUBO, it's going into online gaming. There's a trade here that traded. I can't make sense of it. I'm not that smart. 35.40, 45.50. I don't know if this was some, I don't know what this was. I don't know if he bought them, sold them, bought one, sold one, bought the other, and now he's just reversing it. He's reversing this and maybe getting one. I don't know. Trying to make sense, but it looks like a shuffling of open interest here. Okay. 35 to 55, somewhere in that range. Remember, we talk about constantly the left side of the mountain and the right side of the mountain, and it usually doesn't go from 63 down to 0, right? There's always this, act 2 of the mountain, and it looks like we're in act 2. I would be very, very surprised if FUBO was able to retake 62 and go right through. If it does, it's going to 100. It's like a GME. It doesn't matter, right? The shorts are now fully in mode here. We were expecting something to happen, whatever that might be, to happen in this name, to move up to, call it the 35 to 45 range. And the shorts are going to come back in this and start trying to press it right around here. Again, watching that 60 line and pushing it, we're talking 60, 10. So it's 50 points, 15 risk, 35 downside. That's what they will start pushing down again. So FUBO is something they came out. Here's another interesting part of the story. Online betting, right? They're announcing online betting, which was a natural progression from they're basically selling subscriptions to many sports and live programmings. Great story. I get it. There's a market for that. People, want just sports or just, there's a lot of competition too. I mean, and it'll be hard for FUBO to keep up with the contracts and the pricing of that. but we'll see. We'll see how that plays out. But the natural progression was to actually have online betting off of the screen, right, while you're watching the game. And what I would say is very simply, consider, we talk about online gaming in other realms, right? So consider that, a DraftKings or any one of these online gaming companies. My thought, and it will continue to be the thought, is that it's a commodity business. If you think about, I was thinking, what's an easy way to talk about this? What's a good way to say this is, look at TD Ameritrade, E-Trade, Schwab. They have an app, right? You have an app in hand, and you trade options. There's a market for an option. You want to trade an Apple option, a FUBO option. There's a market, and you press a button and you take that market. These big brokerage companies, they don't take down that trade. It's just an app. The app then takes it and sends it off to, many times, Citadel, right? So Citadel's on the other side. So in this case, online gaming, the way I see it, because it's a commodity, anybody's going to be able to have this online gaming app if you want it. Felix is, Options Geeks online betting. And I can put a little thing on the right and have a little app. And if somebody clicks one of the games or whatever you want to bet on, and then you go to, I send that because it's an app given to me by, let's just imagine Citadel gets into online gaming, right? Because all it is odds. And I'm using their backbone, then anybody can get into this business, right? And it's going to be a race. The margins, sure, Citadel's going to give me a commission, or they're going to give the better flow that I'm giving them. They're going to give me a commission. But at the end of the day, it's a race to the bottom. The winner is going to be the person taking the bets, right? The winner is the house. Mm-hmm. All these apps, if they're not the house, then they're not going to be able to take the bets. However, if the house, doesn't like that, there's a lot of other players, and I want to be the house, and I want to build an app that I can just white label to everyone. And Citadel, I can, what they did with E-Trade, Robinhood, TD Ameritrade. If I can do that, then what's the difference? What's the difference then? I mean, there really isn't. It's a commodity, and me as Options Geek, who has some app that's willing to put online betting, and I can make an announcement, Options Geeks doing online betting. Okay, I mean, that's. It's just me out of what will be thousands of people that will be able to do that. So that's where I see it going. I do see the gaming industry growing tremendously, online gaming. But at the end of the day, is it this proprietary product? And ultimately, I don't believe that it is. It's simply marketing, and it's an app. And ultimately, there could be Citadel might even be thinking about it. If I thought about it, I'm sure Citadel's thinking about it. There's a huge opportunity, online gaming. We want to be the house. Now, actually, that's a good lead to Las Vegas Sands. Mm-hmm. Okay, so we talk about a lot of things that worked and things like Las Vegas Sands. We were long it. It stinks. Okay, the stock is down. I tell people, if members are watching, sell it. You don't have to call me. I get 10 emails right now. What should we do, Las Vegas Sands? Well, what should you do? The stock is down. Okay, the guy unfortunately passed away, and he was a visionary in Las Vegas. He was the guy who invented the conventions of Las Vegas. Okay, Sheldon Addison. He passed away, 85 years old. Now, he has an executive team. Sheldon Addison was a very hands-on guy, right? He was the guy. It was his way or the highway. Well, now you probably have a lot of younger executives, and what are they thinking about? They're probably thinking about online gaming, right? Because the new people, the new younger 20 to 30-year-olds, they want online gaming. They want that stuff. Sheldon Addison didn't want online gaming. He didn't like online gaming. Okay, so him passing away, now you have a whole team. Maybe LVS, Las Vegas Sands, gets into online gaming. Nobody knows. But what happens is the stock is down. Stock is down. It wasn't down yesterday, which was odd. So what that tells me is what naturally happens. Investors, large investors, obviously, as he passed away, probably calling up the company, asking for more information, and saying, what do you think here? What do you think there? And they're not getting the answers they want. And, Las Vegas Sands like, yeah, we have a few people that we're looking at the CEO position. We're going to make an announcement soon. In limbo, stock is probably stuck. Las Vegas Sands, it's people react with their money. They sell this. Like, say, I'm not getting answers. I'm going to sell the stock. It traded okay yesterday. Today's not trading well. It's the option's down 50%, you sell it, and we move on, and we try to keep going. And, when things are up, we're taking some money off the table. So I would say Las Vegas Sands, I liked it. It's not doing well right now. So I call it a weak horse, and I take it off the track, and go back to the training grounds, like get off my sheets and you're done. Like, I don't need you anymore. When I do need you, when you start acting well, then we're going to look at you again, and we're going to take a look at the chart, take a look at what people are buying, and if they're still buying. Okay, so that's our signal. So Las Vegas Sands not doing so well. We had one NNDM.
Yes,
we talked about that. Triple D, NNDM, same type of 3D printing. People writing comments. I appreciate the comments in the last video, talking about, you know, how they see it or how they think about this stock. There's a lot of options activity today. Frankly, in the Februaries, I see it mainly in the open interest where there's a lot of options. So I would say, to me, it looks a little bit like people are getting out. It looks a little bit like people are getting out here on a big move. Not saying it's going down. It just looks like people are just shuffling around. It's hard. It would be very difficult to tell whether they're getting in or out. If we looked at one, I'll just look at this one. This one actually looks like a buy, but again, I'm not sure if they actually sold that to take in some premium, right? So in a lot of these, you might start seeing when the stock is up $2, you know, this is where you start seeing the buys in the morning because someone was perhaps shorting the 10 calls against a stock at $8, thinking they would take in some premium, and now it's running away from them and they just want to get out of that position and leave the stock. So it's always very difficult to tell when the open interest is so high and in names that it moves so much that they look like they're a buyer in the morning, but it may just be to cover. So I'm not, and remember, the vol at 170 is attracting sellers, right? In these names, vol 150, even 100. When you talk about 200 vol, the premiums look so juicy. You just think, how is the stock ever going to get there? I can just sell this and wait a week, you know, 10 days, and I'm going to take in some money. Well, within the next 10 days, the stock goes from 8 to now 11, and I think it traded a little bit higher than that before. So NNDM trading well, not a name I would be shorting, you know, but it's something to look at. Intel, let's talk about Intel.
Yes,
let's really talk about Intel.
Since yesterday.
Like, this is okay. So this is here's a lesson in. I'm not a person that believes in coincidences too much, a lot. I just don't believe in coincidence. Rarely do I believe in coincidence. When here's let's look at the weekly in Intel. Okay, Intel hasn't done anything in 2 years. It tried to go up, came back down. You had a new CEO right around here. Eventually, he's gone now. The announcement today is that there's a new CEO. You know, I look at UOA every day, all the time, just looking for opportunities, looking for places where, you know, maybe the market's telling you something. They're telling you a big move is coming. Intel does not pop up in the UOA probably maybe once every 100 days, you know what I mean? 300 days in the last 2 years. It's just not a name that was popping up a lot. Yet, in the last week and a half, it's been popping up and we've been talking about it. Like, oh, some Intel calls. We're definitely talking about the semis, but when you talk about the semis, you talk about the exciting semis. Intel is something that is just not on people's minds, right? And they're coming in the last week and a half, 2 weeks. Now, how do I think things like this transpire? Okay, well, they just announced that there's a new CEO, and the new CEO is coming from VMware. And the way things work is, if you're a CEO at X company X, and you help investors, BlackRock, Vanguard, some of the big guys, you've helped them make money over the years with your stock. There's this relationship between investors and the CEOs, the management, the board. And so if the board decides, just like Ryan Cohen and GME, right? There's investors that are following just him. They believe in him because he's made them billions of dollars in Chewy, and so they're following him. It's the same game on any stock. CEO leaves, the CEO has a following. They love him or they don't like him, or the stock's going to go up based on whether or not he has that following. In this case, he's the CEO of VMware. These guys have conversations with people. They're not going to explicitly say, "Hey, I'm going to be the next CEO of Intel," but there's conversations probably with a lot of investors on the side saying, "Hey, I'm thinking about maybe moving ship. You know, what do you think is out there?" What people kind of know, right? There's paperwork that needs to be done. You know, somehow it appears that this news was leaked over the last week, because out of nowhere, there's Intel buyers. Right. Now, you know, they had an announcement on the 4 processes yesterday, and we thought maybe that was it. And oh, they're trying to, you know, but then pops up today. We had no idea. Nobody has an idea, except I don't know. I guess it's coincidence that, you know, that people were buying 50,000, 100,000 call options. So this is why we look at UOA, right? But this is the exact reason, is because, you know, at the core, if you're looking at unusual options activity, at the core, you have to believe that there is some element of edge. There is some element of edge in what is happening in the markets, what is happening behind the scenes, what is happening in conversations. It could just be that, you know, the CEO's, you know, hired a real estate agent in, you know, wherever Intel offices are, and he's moving from Dallas, I think, or wherever VMware is. You know, who knows? But, you know, there are people constantly in the know, you know, around this person, and all it takes is one little, you know, slip of the tongue, one wrong move, one whatever it is. Maybe there's a CEO. How much does it cost for billionaires to track every CEO and what flight they get on? I don't know. You know, if you saw it on Wall Street, the movie Wall Street, it was thought about, right? It's not like it can never happen. It was thought about. If you think people don't track on the side airplanes, you know, and where company jets are going, you know, I got a bridge to sell you too. I mean, it's one piece of evidence. It's one small clue. It may not mean anything, but one out of 1,000 pieces of information might lead you to something. And so people use it. They use that information as one factor, if you will. So, you know, Intel stock up huge. Never talk about, I mean, go ahead.
Right. So we as average investors can use UOA to actually benefit from all that information gathered, like so many manpower hours, so much money.
Right. The point is that the hedge funds do their work. And when they find the answer, what do? They run for leverage. They, you know, the way you make the most money on Wall Street is with leverage. And so they do all their work, and every once in a while they find a nugget, and they're like, okay, obviously people don't know that CEO is going to change. And if he does, this is a great following. And so we're going to get in. You know, look, if I bought those calls, I could simply say, yeah, well, you know, we were expecting something because AMD was coming out. And so, you know, AMD coming out, or we like earnings, or we think the chips, you know, it's very difficult to say, you know, but it's a coincidence. I find it difficult to believe that, you know, these coincidences, how they happen and the timing and whatnot. But I don't think that there's a way to actually jump in there. So, yes, that's why we use UA. So let's get down to some of the things we're seeing today. Here's another one. Yeah, here's another one. Zynga. This is brutal, because this one I like. It fits what I look for, right? Eyeballs, a growing user base. You know, forget about the earnings and the revenue so much. Is it growing? Is it in a space where it's trendy? And this checks a lot of the boxes. It's got a huge user base. Yes, the revenues are concentrated in 1 or 2 games, but you then see, you know, you talk about out of the money options and big UOA. There was a $750 million convert in December on this name when the stock was 8 and change, and basically there was no interest. So people paid large investors paid $750 million to have the right to buy stock from that day until 2026. So it's about a 6 year option. Okay, because they get no commission. They're just basically paying premium, $750 million, but they get to buy X million shares of Zynga at around 12 and change. I think it was. It's on the record there. So they're buying out of the money calls, and then, you know, the stock trades well after that. We're seeing today. Let's take a look, just so we see it. It popped up on the UOA this morning, and it's been going since. It looks like Zynga. Yeah. So the call buyer has been. It's just been all day. It's been consistent. He's still in there. See this? So he bought it in the morning. Some traded here, and you can see by the time of sales. And this is kind of why I like looking at time of sales to see how people are buying it. But you see here, 9:55, 56, 57, 300 lot, 300, 10 o'clock, 10:01. Someone is buying this thing. This isn't a human. This is June. So it's not like January where it's day traders. This is a machine, 12, 13, 14. Okay. And that machine tells me that all of these trades are together. It's one guy. It's one person. Okay, one person, and he's in a machine and he's buying these. I wouldn't say that's the best way to buy them, but because at this point you're sort of telegraphing that you'll be in all day. Depends on how aggressive you get. See how some of this is trading on the bid here? It's because he's just bidding it. So he's not being super aggressive. He's just basically saying, I don't know how many he has to buy, but he's saying, I will buy it on the bid. I've pushed this up from, let's see where he started buying it. Maybe he just has a limit. So I paid 36, 37 cents, 40 cents. He's pushed it up from the high 30s all the way up to right now 47, 48 cents. He's probably saying, I don't want to pay any higher than 48 cents. And tells the machine, I want the machine to follow the stock. If it's coming down, I want you to drop my bid a little bit. Okay. And so it looks like it's the same buyer coming across here on the June 13 calls in Zynga. So this is something I think is interesting. Let's look at a bigger chart. Look, we got in this a little early. The stock traded off. We were in here. We got stopped out right around here, probably. Okay.
Can you just inspect it?
What's that? Yeah, inspect it. Sorry. So sorry about that, Marco. So we probably got stopped out right around here. The convertible bond was here, and it has traded well since that convertible bond. Somebody was buying. Again, you talk about out of the money options and unusual options, right? They bought $750 million of options on Zynga. Not March or April. They bought 2026. But to give you an idea of the potential that they think on this, they're thinking at least a double. And if they're doing that over time, they're probably buying stock as well. So this is a way, that convertible bond might have been a way for them to, companies need support. Zynga doesn't have support. Maybe that was we always talk about the relationship between investors and companies. One stock that doesn't have support that we got stopped at as well is Rocket. Good company, makes a lot of money, technology, AI. Love the whole story. I love it. It's interest rates going up. Maybe you don't get the refi business. Okay, fine, I get that. But they're dominating that business, and maybe people catch up in time. But right now they're dominating. They don't have much support, meaning there's not a lot of these large investors that are going to take the stock up. Why? Because he only released a small percentage to people. He only IPO'd or gave out, I think it was 2% of the whole float of the whole company. So someone like BlackRock says, we're not going to make you rich. Like we need money too. Zynga doesn't have this rah support that all these other stocks have. If they had people actively buying and millions and millions and millions of shares, then people would get excited about Zynga because the stock would be going up. It would attract more people. So Zynga says, okay, maybe they give up and they say, fine, we'll sell you warrants and we'll sell you 750. And maybe the big guys buy it because they believe that the stock could trade 25. And now they've bought over the course of 5 years. So now they're going to be buying the stock. There's a floor there. They spent $750 million in calls. Now they got to get the stock up, right? So the only way to do that is just buy it over time. They believe in a long-term story. That's bullish. That's very bullish for Zynga. I believe that if the story is what all the other stories are, right? It's eyeballs. Ultimately, you can monetize. The negative is that they have basically two games. It's concentrated revenues, and they got a big boost from COVID-19. And who knows what happens? Can they sustain that growth afterwards? The other positive is that they just bought someone and they're getting into this new genre of games, which is called like high casual, super high casual games or something like that. So I think that's.
What are they thinking? Where's the target stock price on this one? What do you think? What does the tool show?
Great question. So here we have a high at 1057, stock coming from 6 here, drop back to 8, and it's trying to climb. On Zynga, we're looking at in June, they're buying this one here, so around $16. Let's just call it like 17, 18. Going 18, and that's how we get. So $17, $18 is what they're looking at. I'd actually go a little bit lower. $17. I mean, it's way out of the money here. So, you're talking about a massive move. And it's higher than it actually is. So this is this would be a massive move. We'll see what happens. My spidey senses are up a little bit. Like, why not this one? Why not the 10s? Why this one? But those call options were the call options, the warrants that the company sold makes me believe, the potential for this is, a lot higher, a lot higher. If somebody's, think about, you're going to ask a company to spend investors spend $750 million on call options. They believe this, they would only buy call options. They believe there's big potential. So maybe there's an announcement, maybe the next earnings shows something much more positive than what they've shown. This stock was on its way before the last earnings, was on its way, shot up at 10.5. If it can recap 10.5, you got a 10.5, $8 range here in a quarter. Okay, so 10.5 to 7.75 range. So that would be 2.75 higher above this, can get you right towards that 13 level. So if this can get, why not? Like, why can't this gain momentum if they have good earnings, show good revenues, or show that this new merger is working? The stock is holding up here, and it's holding up well. See these long wicks?
Mm-hmm.
Every time it goes down on a weekly, it's being shot back up. So these are just clues. Someone's buying them. The stock is trading well. People have bought huge amounts of out of the money options. The story is there, and they believe in the long-term story. So that's what I would say about Zynga. We can move on to the next. The next thing that we're seeing today is marijuana stocks, right?
Correct.
You see these, some of these, the TLRYs, what are we seeing?
We see ACB.
ACB, okay. ACB. I was looking at the CGC and TLRY, but okay, so ACB, let's just look at it.
In particular, January 29th, $12 calls.
January 29th. Okay. 5,000, 3,000, 3,000.
Like there's a spread down there, right?
Okay. So somebody did the 85 cent versus 27 cents or something like that. 50 cents. 50 cents. Not terrible, right? $5. If you think it's going towards 18, $5, lay out 50 cents to make $5. So to get back $5. So that is $4.50. So 9 to 1.
Mm-hmm.
Not terrible. I mean, it's not a terrible bet. Why January 20? All right. So here's something like, first I'm asking myself, okay, I can get this one. I understand this. You're thinking around $16 here, excuse me, but why 13, 18 call spread, and why January 29th? So I would have to, what I'm trying to figure out is, why January 29th? Why not February 19th? Why not get the earnings? Like, somebody's coming in here, waking up and saying, no, all I need is 2 weeks, right? All I need is 2 weeks.
Like they're waiting for something. Right?
Yeah. Why 2 weeks? What's happening? Well, we talked a little bit about like Cuomo and maybe New York State and them getting into not only gambling, online gambling, but also marijuana, right? New Jersey has passed their law. New York's in a lot of trouble. They need money from the government. There was an article on Cuomo asking Biden for cash. So the state needs a lot of money. They're losing billions of dollars on people not being on tourism, people not being able to travel into New York City. They're losing billions of dollars on taxes from the wealthy who are finding different places to go. They're losing billions of dollars from corporations who are now moving away from, because it's work at home, you can move out of Manhattan. Goldman Sachs moved their whole wealth asset management to Florida. There is a lot going on as far as losing taxes, and Cuomo is frankly begging Biden to, hey, where's the money? Like, you want New York City to survive, New York to survive, we need money. They're also going to look for money in marijuana, and they're going to look for money in online gaming, and so that's I believe they're already in session. I think in the last week, the New York State's been in session to figure out their budget and how they're going to make money. So, it's important. It's important to start looking into January 29th. That's I haven't done it yet, but that's what I would be looking for. I think it has to do with the states starting to ask, before you ask the government for money, the government's going to say, well, is there other ways that you can make money? Let's figure this out. Usually, while it seems like it's always a blank check, usually there's a discussion. I'm hoping this discussion. I have no idea what I'm seeing. Who knows what's actually happens, but you would think there'd be a discussion where we can't just give you $50 billion, New York. Why don't you tell us what you need? What can we do to help you? And if there's enough states that are saying we need 20, 30, 40, $50 billion, and it's going to be another $1 trillion to give the states, maybe that puts pressure. Kamala Harris says, hey, Joe, why don't we, pass this SAFE or MORE Act and allow, pass it as a federal law to sort of allow people to, or ease it up a little bit to allow people to invest in these stocks and allow people to make money. That's my guess on an ACB. But January 29th is odd. Let's just look at, I just want to see. So we are long marijuana. We're long the CGC. It was, by the way, so this was, I believe it hit 100% today in the CGC. So people, should be taking a little bit off. Same thing with, look, Pinterest, GM. I mean, we're talking a big game here. We think the stocks are going up, but if there's 100% winner, take a little bit off. I want you to see that, when you see these big names moving, you can see that the open interest, the volume is based off of, a lot of times, off the open interest, which is trying to give you an idea that people are getting out when stocks move, have these big moves. So we're long CGC. It's trading up. I have no reason to believe that this is going to stop anytime soon. I think we haven't even heard anything about, there's so much focus on energy and clean energy. Cannabis, marijuana seems to be an afterthought, but as soon, it's definitely on the agenda. It has to be, right? It's the way the government the states can save themselves. So it has to be on the agenda somewhere. It's just clean energy is what's ruling the world right now. And Biden will be talking about it tomorrow. But in the back rooms, there's got to be talk about pushing, cannabis and marijuana laws or easing up the laws or doing something to help that industry become more developed and taxable. And taxable. So CGC, we're seeing some volume there, but I think there was TLRY was actually a little bit more.
I'm just looking at it right now.
A little bit.
You can look at February 19th, and then I have two, like $16 strikes. You see the calls, right? Those look like a buy, and then $12 puts. Pretty interesting.
Puts, huh? Why do people buy puts?
Right.
Market goes up every day. Just kidding. Okay, so let's see here. So it does look a little bit, 123, 134. Yeah, it looks like it could have been put buying here. It does look like that. It's not in a spread. It's only 2,000 options. It's not. This is 2,500. It's not a lot. This looks a little bit like maybe rolling or something here. Is this a spread here? 15, 16? No,
I don't think so.
No spread. No. Maybe not. No, probably not. Okay. Maybe someone's just vol was 116. So you see how vol here was 117? Like it closed yesterday at it closed at, let's call it 119 or so, and opened up trading, people are trading all these options here, and it opened up trading 118, 117, 118. Stock traded up. I can go along with it was a buy. Here. Vol has been going up throughout the day. Someone is buying these. Let's just see if it's this computer type of buying. And what do we see? It does look like computer type of buying, actually. 39. So someone came in. Look how someone came in right in the get-go. They're buying 33, 34. This one, for whatever reason, popped up here. Maybe that was an outside order. But you see how it's every minute? That's a computer. That's not a live person. So that's interesting. I don't know. Somebody's buying it, not a care in the world what vol he pays. He doesn't care what vol he's paying. He's just buying it, buying every minute, buy 5, 10. So this is an ongoing buyer in TLRY. I like the marijuana names. There's nothing I could say more. We're long them. I like them. I think that there's an opportunity that if the government starts shifting, they're going to talk clean energy up tomorrow, and probably it's going to be talked over the weekend. And then they're going to have to talk about something else. And what's the next thing to help the states? And again, online gaming and marijuana, that's where the next taxable income is going to come for states. So until they start talking about them, I think that this is bubbling up all of these stocks. This stock just made a move from 10 to 15. It's a smaller stock. CGC is a little bit more conservative. It's part of the reason why I bought that one, because it doesn't move as fast, which allows people to get out. But it should make a significant move if they start talking about it, and it's set up. If just looking at a bigger name, CGC, you see where this could go. I mean, the whole thought when we put this trade on was it can go from here, up to $40. That was the whole thinking. Or see the congestion up here, and you see this turn here. That's what the thought is. So, so what? You let go of a little bit here, you catch 100% mover, but we're looking for this. This is a good horse. We just talked about a bad horse, Las Vegas Sands, and you take the horse off the track. This is a good horse. You want to let your good horses run, but you want to be smart about it. You want to take a little bit off a couple of chips off the table. But this is a good horse. It's trading well, and that's what you want. You want a portfolio of stocks that are trading well. And when they get stopped, then there's something wrong with them, right? They shouldn't really, if they were good horses, they wouldn't get stopped in general. Not saying that you get stopped and then the thing goes up 700% and you're upset. It's going to happen. It doesn't happen often, I'll tell you that much, but it will happen. And you're trying to, the goal of this game is trying to get a good entry, try to be patient, good entry. And if you find the right horse, it's going to work for you, and it's going to keep trading. And when it finds its mojo, it's going to find that groove. This is a new stock. This is a gap 29, and it held there 4 days, and now it's moving high. So I have nothing bad to say about the marijuana stocks. I think they're in a nice trend. I think it's early on still. They were in a nice trend a year and a half, 2 years ago, maybe. Came down and they didn't do anything for a while. Now you have the right president in there and the right vice president in there that is trying to push their agenda. So I think there's something there. When does it happen? I don't know, but I think that I think the risk, what we're looking for, I'm not telling you marijuana stocks are going up. I'm telling you that when we bought those options, the risk reward was there. That's important. Mm-hmm. I have no idea where these stocks are going, to be honest. If you think I know, then there's something wrong with you. I know what I see. I know that, and what I'm trying to teach everyone in this room is when you see something and we're looking for risk reward, that's really what the game is about. The game is about finding those pockets. Now, I can tell you I am a little bit nervous just talking about just the stocks and just stocks in general. SPYs are trading near the highs, but it's trading well, right? This is trading really well. I suspect that tomorrow is going to be a big day, and we'll see how the market reacts after that. I mean, tomorrow is the big day, right? Trillions of dollars, capital T, small s, trillions. Trillions could be 10 trillion, 100 trillion, right? Everybody's imagination runs wild when you start thinking, what is he going to say? Oh my God, well, tomorrow we're going to figure it out. Trillions, he's already told us, he kind of said, it's not going to be a small amount. What we're going to ask is for trillions of dollars. And what I suspect and what I get nervous about is that trillions sounds great. And there might be parties on Thursday, Friday, and Saturday night. And then you wake up Sunday and you start seeing reports with, oh, by the way, as a side note, this is how you're going to, this is how we're going to pay for it. And all of a sudden it's like, well, how are you going to pay? What does that mean? It's like, well, you got to pay for it some way. You just can't just out of thin air. Although maybe you can out of thin air these days. I have no idea. I think all economics is like being shifted to you just print money and that's all good. But, somebody's got to pay for it, and the states are begging for money. People are looking for money. At the end of the day, someone's got to pay for it. And nobody's looking at large corporations and some of these buybacks and all these different things. Don't allow the companies to do that and tax what they're making and start taking it from these larger companies. Is my guess that they would win. They'd win a lot of support from the middle class, which is getting decimated. They'd win a lot of support if they started changing policy in that direction. They'd win support for marijuana. They'd win support for online gaming. They'd win support for a lot of these things. But at the end of the day, you really want to win support. Don't have some CEO make $40 million a year and then the stock collapses and then you bail out the company. That's a disaster. So, we can go from there. And what's the next thing that you got?
Okay, the next thing I got is interesting EV concept is GOEV. And I've seen some action. GOEV, yes.
What is that? GOEV?
Right. It's an EV company that GOEV, right? Okay. They make electronic vehicles, right? GOEV. Yep, there it is.
Oh, another one?
So there was some talk with Apple acquisition like last year, and I think it just leaked. So it was pretty interesting.
There's options in this, right? What people should,
yeah,
is
look
it
at February 19th.
Wow. Okay.
It looks pretty interesting. So now I'm debating whether or not people are selling out of it because there was a big move.
They sell cars?
Yeah, they make electric vehicles, and they're pretty weird. They're working on a subscription model. It's pretty interesting. They're not selling them, but it's kind of like a
subscription
lease.
Model. Yeah, right. Yeah. Apple held talks, so that's what this is about. With over electric vehicle. It was out yesterday, or maybe it was after the bell yesterday. Shares are racing higher. Okay, so they talked to them. Hold on.
Right.
Okay. Apple talks to a lot of people, but when did they talk to them? This week or something?
They said in 2020. Now, that was kind of unclear to me. Like they said early 2020, and now it's popping up.
Huh? 2020. Last year. Acquisition talked to the EV startup last year, and they're hearing about it now. Somebody got wind. Okay, I get it. But you know what this sounds like to me? I mean, Apple probably talks to a lot of people, right? They're trying to get into the business. So what's the best way to get into position? Just go talk to a small company, and figure out their whole business model. What's your whole business model? And the way I would think about it too is, because people are looking right now at GOEV, Apple, what if this, and I don't, this is how it works. I'm going to tell you how it works, and then you can make your own decision. But what if there's a stock XYZ? And I don't even know what these guys do, but maybe there's a stock XYZ that does the same thing as Canoe Inc., right? So you have two companies, XYZ and GOEV. And Apple is much more interested in XYZ, right? So they want to learn a lot more. They basically look at them like they're both the same type of companies. Let's go look at and talk to GOEV. Let's go get as much information about the whole business. We'll sign NDAs. We don't really care, right? Because we're not really interested in that company. We're actually interested in XYZ. And maybe we're interested in the executives at XYZ, but we then definitely can't go talk to XYZ, because then we'd sign an NDA, and we sign this NDA, and we sign it. You can't just go. Apple can't just go and inside a company, talk to them, hear their whole story, hear the way their business works, and then go hire the 3 engineers and the 3 executives. They'd be sued, right? You'd be sued for a lot of money. And so, what could happen is Apple could go to Canoe and say, we really love you. Tell us about your business. Tell us everything. And what does people do? When Apple walks in the door, they tell them everything. This is how we do this. This is how we do that. They sign NDAs, and Apple walks away saying it's great. And before we leave, and say, what do you think about your competitors? And then we say, yeah. And you say, well, what do you like about them? What do you don't like? And then they say, yeah, well, they have some good guys. This guy's good. This guy stinks. And they said, okay, great. 3 weeks later, you don't even, everybody's excited at Canoe thinking that Apple's going to take them out. And then the talks break down. Talks break down means, you call the Apple operator and you get like a voicemail and nobody calls you back. That's what talks break down. So at the end of the day, Apple probably wanted to learn about subscriptions and how that works and the ins and outs and who's good and insight. But I don't know if that means anything else besides that, right? I mean, so it's a good story. It's a good thing. And I don't want to poo-poo it. It may be that they are, but I'm trying to play devil's advocate both ways and let people decide what they want. But there's, hang on one second. Let me just look at something. Let me look at something. I got to look at something over here. I'm just looking at some data for a second.
All right, no worries. And let me actually, as Phil is doing that, let me show you guys what these cars look like if you haven't seen them. It'd be funny in my opinion. Take a look.
Is it like the other ones that we said, the Solos?
Yeah, I mean it's pretty funny as well. Yeah, here it is, right? So this is their regular vehicle.
Let me see this.
It's called Canoe. Yeah, it looks pretty futuristic. Wow. Yeah, look at it from the inside.
Wow, that's pretty cool.
Yeah. Wow. To me, it looks like a city shuttle that people pay a taxi for, that type of thing. Okay. And they also got a cargo type of thing.
Does it fly?
No, it's not GM. It's not GM. It doesn't fly.
All right. So here, real quickly. So just to give you an idea, how the, Wall Street's a money game, and if you're able to tell a story, you're able to push people in a certain direction, you could make a decent amount of money, right? And so what I mean by that is these call options, what is this? Is this the one, GOEV? Yeah,
Yes.
GOEV. These, I look at this, right? 10,000, but I really see this, right? I see the open interest is 15,000, and I think, okay, stock's up 240 here, just made a big move 3-4 days in a row from 14. Like, what's really going on? When did they buy these calls? Who was buying these calls? What's going on? Because I don't want to be the fool that's starting to buy calls now when everybody's getting out. So I'm looking at this and I see on December 29th, January 6th, January 11th, and January 12th. So you have all these days that people were buying these calls. And so so December 29th, stock around 14. Okay. You go through, let's just go to a bigger one. And let's do, this is part of analyzing some of this stuff to make sure you're not getting, you're not the last guy to the beer keg, and if you tap and you're like, I just paid $5 to get in, I can't get a drink. Those days in college when, trying to fake IDs and stuff. Not that I had any, but
of course.
Okay. So December 29th is right here. Okay, so you're talking about 14, just January 6th. Okay, again, right around 14. January 11th, get more aggressive on the 11th here at 16, and then January 12th yesterday. So they were buying these calls 1, 2, 3, 3, 3, 4, and then it pops up and it's up close to $20. It takes a huge run, and then you see them getting out, because there's talks. Like coincidentally, an article just pops up saying Apple was talking. I mean, come on, like, you can't make this stuff up. Like, they're buying calls 3-4 days before a planted article like that. And then you see them actually getting out. I don't like those stories. Like I don't know where this thing is going. For all I know, the thing trades 50. I'm just, I don't like being the guy that is buying it after the big move and everybody's getting out. That's what I'm concerned about here. So GOEV, do what you want. You heard my thing. I would say, the chart's interesting because it's interesting. There's a gap here. There's a lot going on in this area. So maybe it fills this gap at 16 for a momentum play and you want to play it to 24 back to the high. I can't stop you, but I would say I just don't like this. Everybody's walking out of the party and I'm like, as they're walking out, they were like, beer's all in the back, ice cold. It's all ready for you. And you're like, oh, you're so excited. You get to the big, and it's like, there's like, a quarter of a cup left and everybody's gone. The music is kind of dying down. I mean, you know the story. Right. Actually, you're cooler than me. I was the guy walking in. You were the guy walking out. But so, all right. So GOEV, I have no idea. How about the one yesterday? I mean, I saw, John Najarian talk about the MOMO, and I saw it. I think it's interesting. I would say a lot of call buying,
19,
and a lot of stock trading yesterday. So we have MOMO here. My 2 cents is, this stock, they have an app, I think, called like Tantan or something like that. It's like a dating app in China. Dating app in China, and they just haven't been doing well. Well, dating app in China is not doing well because the guards are locking everybody in China, apparently. So that's not doing well. But this stock has just not done well. And I think in this type of environment, they start looking for stocks that are down and out. Obviously, you look at all the big Chinese names, and they're gangbusters. And so they start hunting around for names where they can buy calls and maybe push stocks. A $16 stock. Can we get this to 23 with a good story turnaround? Maybe. I don't know. It's interesting because the call buyers are coming in. There's a little bit of a MACD diversion here where you had a low here, but there was a higher MACD. So that's what I'm looking at here. But this downtrend is a consistent downtrend for a very, very long time. And, now it's just going to go up like this and recapture this. Maybe it's looking for an announcement. I wouldn't put it past anyone that someone knows something. I mean, it's the Chinese stocks, and it's a little bit different. We talked about insider trading. It's a little bit different. There's a little bit different rules in China on insider trading, and it's almost allowed for the big guys. And so when you start seeing big volume in the Chinese names, then I pay attention. 2 days in a row now with big volume makes me pay more attention. I would like to see it. I would like to see it come back to like the 14s. I'd like to see sort of like an AMD, an AMD when everybody jumps in and everybody's in now, everybody's loaded up with calls. I'd love to see one bad day, 14.5, and see how it handles that day. And then, maybe I'm a little bit more bullish on this, but I did look at it. Again, Chinese name, beaten down name. I always get sucked into this one because, I've lost twice on this one now, so that's no good. But it's like one of these names that sucks me in, and this is a name that, these things trade wild, right? 15 to 30, 30 back to 18. Huya and I can't even say this. Doyu, names that I look at whenever I look at beaten down Chinese names that might be turning around. I think of, what is it? Doyu? There's a merger going on between these two. They're both backed by Tencent, and which is obviously huge Chinese name. So this is something, to look at. So you see this $11 range, 11 here, breakout, support. Maybe there's something here. This is coming down though. So I don't know. It's not something I looked at it. I looked at both of them. You have a MACD. So trying to get, I'm ho-hum about the whole thing, but who knows? When you're seeing that much call, it's one thing to see the call buying one day, and then the next day you see again a big trade. That says to me that maybe, again, the way these things work is, remember, I'm a billionaire. I have a great idea. Billionaire, I have a great idea. What do I do first? I buy it myself, right? I buy it myself. Then what do? Then I go tell you, and then you do it. But I buy it first. So the fact that I see February calls again bid today is, a good sign that somebody just learned a story from someone else. You see this 24,019s? Yes. That's one billionaire yesterday calling another billionaire going, hey, by the way, did you see this? No, what? Oh, I'm hearing this. And second billionaire goes in and buys, those calls. So I think there's something there. I don't like chasing, and I'm trying not to chase. There's been a little bit of lack of I'm trying not to chase is really the answer. I suspect that one day, I don't know when that day is, but one day we have calls on. I just don't want to keep on adding calls and chase every stock that's moving. But one day in maybe the near future, we're down 3-4%. And on the day, 3% in this market will feel like an absolute crash. Okay, it's going to feel awful. But in hindsight, it might only, you're just going to got to think about it and say, it's only 3%. And, this can move, this market can move around very quickly. So again, not being bearish. We're obviously long a lot of calls. We have some puts on, but I'm actively looking for puts. So we'll leave it to that. We'll leave it there.
One interesting I just saw from MB is CCIV. If you want to take a look at it, I'm just looking at it and it looks
CCIV.
Yeah, looks like there's no open interest. Churchill Capital Corp.
Jeez, what is this?
I don't know.
Wait, this was a SPAC. I think
yes, it was
a SPAC.
Yes.
Churchill's Ivy stock is higher. Oh, here. Let's read quick. Okay, trading higher. Oh, electric vehicle. No kidding. It's close to a deal to take electric vehicle. Lucid Motors. Okay, Lucid Motors. Oh, got another car. You see, at the end of the day, everybody makes cars. It's the software. Just remember, software. Tesla, Apple. So what? Reported Citigroup. Oh, Michael Klein. Okay, who's that? No idea. Citigroup executive. All right. Well, it's another story like every other story. They will be available up to 521 and 169 top trim of 100 horsepower. So this is now like going to be the Ferraris of EVs, it looks like.
Perhaps.
Right? It's going to be a very expensive company, secured $1 billion from Saudi Arabia. They're the buyer, so why not invest in them? And okay, I get it. Okay, so Churchill's, I get it. So sleek, cool EV car. Now they're getting to like the high-end EVs, CCIV. And what are they buying? So I get it. It's CCIV. Okay. Now they're buying. It must have just started trading today. Is that right? Oh wow.
Perhaps.
This is just starting trading. It's hard. So people just loading up here on options on day one.
Well. Yeah.
Yeah. So day one. So People like it, obviously. Yeah, I mean, look, this is sort of like I don't know. I smell a little bit of Wall Street bets here, a little bit, and I don't want to fight with that crowd. That mom's a big crowd, and so I would say that people are lining up. But man, it's it's not cheap to play. The 15 calls. You want to buy the 15 calls? It's $4. That's 25%. 405. That's 25% of the worth of the stock. So maybe, just maybe, you just buy the stock.
Right, just the stock.
Just buy the stock, and okay, you're not going to go for the Grand Slam, but you also don't give yourself 4 weeks to actually make it, right? The $4. You understand what I'm saying? It's like I'd rather pay 16.5 for the stock than $4 for a 15 call that expires, or 350 for something that expires in 20 days, 20 trading days, 23 trading days, right? So just again, risk reward is how I'm thinking. If it's liquid enough, maybe just some shares in the stock is better. Maybe some shares, and I don't. You could buy some shares if you like the stock long term. More than a month, then I would consider 16.5 is probably not terrible. It started at 10. I guess before the SPAC was $10. So the SPAC usually comes out at 10, I believe. So that's where you come. So they're getting in. I would say consider this stock. Consider the stock. Stock's going to go to 60 in 6 months. Then 16.5 to 60 is, call it 43.5. So that's 2.5. So call it, you'll make 2.5 times your money. Or you can go try to make 2.5 times your money in the next 20 days. But then the stock's got to be 4 times 3.5 is 50. So stock's gonna be close to 30. It's up to you. That would be a double in the stock, or I would weigh that. So 20 days versus I get 6 months to a year to look at it. If I just buy a little bit of shares, that's how I would do it. I would think the risk reward is leaning more towards stock.
That's a good perspective. I think that's important for people to know and actually know how to differentiate when they're trying to use options. And
Sure. What else? Any other names?
Not really. We got some UOA, but I also have a question for you.
Okay, go for it.
And it's concerning the target stock price. So oftentimes, we set this target stock price, but should we always wait for it to hit the target stock price? Should we sometimes sell lower? Because for me, I'm always weighing between, okay, it hit the target, but I'm at 400% gains or something like that. So which one should I?
Yeah. Great question. I get that question a lot, and especially when it hits the target, and people like, should I just get out at the target? And what I say is, look, I put a target there at day one, right? It's there day one because we need a target, because we need to sort of have a vision of where this thing could actually go. And if I see buyers aiming at target X, and I'm looking at that, and then I'm looking at the chart saying, can I forget about the options say now, can I just look at the chart and can I get target X? And then if I see, okay, I could see and imagine this thing changing, then I start thinking, what would cause that change in the chart? Okay, I could get it. It makes sense. The high was the same as X. And so it looks like that somebody's looking for it to get back to the high. Then I'm trying to think, okay, I can see that. I can imagine that. Now the question is, can I imagine why? And then that's when we start digging and we're thinking about the story. We're asking the community to add to the story. I'm constantly looking for little tidbits to say, what are they thinking here? What are they thinking there? I'm on Seeking Alpha trying to look at the comment section because there's some smart people, right? It's like, I'd love those people here, and I'd love it all together saying, well, I'm seeing this. What are you seeing? Well, I'm seeing coal buying. Well, I'm seeing coal buying, and they're thinking this target stock price, and you're thinking it's negative. Why would they be thinking that? And challenge people who are thinking, because that's when you really hear sort of the inside, the nuances of the story. And so this is what we want to do. So I would say that that target stock price is not the be all end all, especially after the stock starts running. You get a stock running, and do I think Pinterest or GM, like, is there a limit at where I put the initial target stock price? No, you give me a cruise spinoff, right? You give me that cruise, it's going to trade the target stock price on that announcement. And so, what does it mean afterwards? I wouldn't just be out of the position because the minute there's an announcement, it's just, there's a new announcement that nobody knew was coming. And now people get to judge it on that announcement. That probably has some more legs. So everything is context, but at the end of the day, it's not the be all end all. What I want people to focus on is P&L. you make 100%. Do me the favor, just take a little bit off. I don't want to see a 3% down day and everything trades back down. If Pinterest trades back down $6, it's going to take a while for it to climb back to that 100%. And so that's why we do it, because we take the 100% today, and if it comes back down, and if there's a 3% move in the market, Pinterest will probably be down, and it'll be down. And then for it to climb back to that 100%, time will have gone by, the options start decaying a little bit. We want to just take 100%, let it keep playing out, take our money off the table. Same thing in GM. But it's always about P&L. It's always about markers, 100%. Sometimes we get a gap, and instead of 100%, we're luckily we can sell that at 130 or 140. Those are the best trades, right? Because now we've gotten better than the 100. We're now higher, and now maybe the stock even runs. When it hits the 200, 2.25, you could sell some there, right? So these are the types of things that it's very difficult to say always do this or always do that, and that's why I can't. Everyone is different, and everyone will find their own plan and their own little nuances. You got to play the game a little bit to sort of figure that out yourself. We're here to answer your questions, but at the end of the day, my target stock price is simply an idea of where it could be today. Once things transpire, once the story transpires, and we're 3 days from expiration, and the stock hasn't, here's a perfect example. We're 3 days from expiration. The stock hasn't moved toward the target, but the option hasn't been stopped out either. Do I still think it could get there? Probably not. Probably I would move if you asked me again today, I'd probably say, I think it probably comes down a little bit from where we were. So it's all context. It's all how it gets there, when it gets there. But there's no, I have no master computer here that's telling me this is where it's going. I'm looking at the UOA. I'm backing out where the target is. And then I'm trying to erase my memory, and I'm trying to look at the chart, and I'm trying to say, where can it go? And if it can get to if I get to an answer that is commensurate to what I've found in the options, then I am a little bit excited to learn more about the why now, right? That's sort of the process. It's find the trade, right? We're doing everything we can to find buyers, to find real buyers. Out of all the UOA, maybe we find 30% of real buyers. Once we find the real buyers, then I'm looking at all the charts of those buyers and saying, can we get there? Or am I being faked out here? I'm always thinking, is this a fake out? Is this someone fake out? Meaning, is this someone that's buying calls and actually getting out of the stock? That's what I'm always afraid of. Is this like you showed me GOEV or whatever that was? I'm looking at it, and they're selling the calls. They're selling most of their calls. If they were selling 1,000, 2,000, it wouldn't be bad. But now they're selling a good amount. I'm a little nervous about that. So I'm always trying to figure out, is it the beginning of the party, the end of the middle of the party, or the end of the party? Looking through the window, people dancing, inside, like what's going on? Like, can I see? And these are the clues. Is the party just about to get its apex? Like you never want, it's the mountain. You want to, Madonna walks in. I just remember when I was a kid, you see Madonna walk into the nightclub. She walks in at like the peak right at the peak, and she's gone well before the party's over, right? And same thing. And it's like you're always trying to find that party that's just getting started. It's a good party, and when people look at the flyer for the party, they're gonna think, I want to be at that party. And you have to and that's the story. The story is the flyer. So that floor is being passed around, and it's like people get in like, wow, this was like a good party. And they go. When they go, eventually the beer runs out and people looking for the next party. So where are we? That's what I'm asking. Where are we? And that's what you should always, you take my idea. If you're looking at my ideas, you take my ideas, and you will always see the same thing. Some level of, we're seeing some options trading. We're going to back out this target stock price that they're thinking, probably something that they're thinking. And then we're going to look at the chart, and we're going to erase what we just heard. And we're going to do our own sort of thought process on the chart, our own analysis. There's 1,000,001 ways to look at charts. There are experts in charts, and there are people that are beginners, and everyone's going to look at a chart differently. I look at a chart. You go ask 20 experts about where the market's going, you get 20 different answers, right? And so it's an art plus science, and I would suggest people understand that, because that's the second part of the equation, where you're just evaluating this chart. And then the third part is, okay, let's dig into this story a little bit. All right, tell me about what's going on here. Tell me who's the CEO. What is he saying? What's going on? Why are people buying? What's exciting here? Okay.
Great. Yeah. Thank you.
Awesome, man.
All right.
Good.
Thank you, Felix. I mean, we ran out of time. It was a great session. I want to thank everybody.
14. Yeah. You owe me 15 minutes. Okay.
Oh, man. Yeah, you guys make up for it. So make sure you like, comment, subscribe, share this with your friends. We can't do it without you. And thanks for a great session, guys. Keep commenting. We'll be looking at comments for tomorrow, preparing.
Yes, and I want to say that there's many people that are sending me emails telling me to keep going, and thank you, and I appreciate that. We're doing this as it started off and say, now let's try 30 sessions, and we want to see how much this grows. So we need your help to actually make this also valuable for me. Frankly, I want to help everyone, but I need this. I need people to be on, commenting, listening, and we need to get to the next level. So thank you so much. Thank you for the good emails. Let's get more people on and at least talking about this.